we are going to talk about supply and demand zones. I think you don't understand yet how important it is to identify supply and demand zones the proper way. In this video, I will teach you the retail way to look at it. But of course, in the Orderflow masterclass, I will teach you how you can identify it the proper way. We can see it exactly in the charts where the supply and demand zones are. But if you are not willing or not ready to learn order flow and you want to only use the candlesticks, I will teach you the proper way to look at it. If you hear me talk about a fair value gap, that is basically the same as a imbalance, as a inefficiency. It doesn't matter how you call it, it's all the same. In the previous lesson, I told you about if we have supply zones or if we have demand zones. Well, a demand zone like this, it is really important to understand the proper supply and demand. Why? Because if it isn't a proper supply, for example, you don't need to put it on your chart. Okay, let's dive in. I have some examples right here. So we only use structure demand and structure supply if there is a valid market structure. What a valid market structure exactly is, I will teach you soon. So we are not going from the last candles of a structural movement. Okay, this will be cleared up later. If there is a cleared structured move without creating a fair value gap or an imbalance, but there is a point of interest POI chance within the zone, and a POI is simply a key level. So if there is a POI chance within the zone, I will still put it on my chart, but I'm giving it mentally low value. Okay, so this is a great example. If this is from low quality, I will put it on my chart, but mentally I am giving it low quality. That's important to understand here. So why is it important to understand good supply and good demand? So for example, if we are looking in an uptrending move like this and we find a distribution model like this, and we know this is high quality supply and the price break structure and we are going lower. In this example, we exactly know if we are shorting that our stop loss will be protected by the sellers in this zone right here. So there's no need to put stop loss any higher, any lower. We know where to put the stop loss based on the quality of the structural supply. Same counts for structure demand. If we see downside movement and we see a little nice accumulation model and we are going long, we know our stop loss is protected. So this is the first thing why it is important. The second thing, I already told you, we need to identify it for our quality of return to zone. So let's talk about high quality supply and demand POIs and how to spot true inefficiencies. Okay, the true inefficiencies are like magnets for algorithmic reactions. Again, fair value gap, imbalances and efficiencies are the same things. For now on, I will call it imbalance because the word inefficiency is a little bit hard for me. It appears, so we call it imbalance. Okay, on the left side, we have a daily OBIF. OBIF means order block with an imbalance. Below it if it's supply and above it if it's demand. So why do we call it supply and how do you draw it, right? So you take the highest point of the bullish candle to the lowest point of the bullish candle. Why? Because this was the candle where the bulls had something to say and the sellers basically took over. So this was a high quality POI. This was a real battle between the buyers and the sellers, and the buyers lost the battle from the sellers. So we call it supply. There are a lot of sell orders coming in at this place and the buyers lost their momentum. So if we see, and I think most of you know the word fair value gap a lot, but we see a true imbalance below. So this is on the daily how you would draw it. But what I want you to do is go on a lower time frame. Zoom in. If you are on the daily, go on the 4 hour, maybe even go on the 2 hour. And I want you to look at a proper market structure. I already taught you how you can draw it. So in this case, we see a low, we see a high, we see a higher low, and we see a higher high. And now we do have proper 4 hour market structure in this daily structure like this. The red zone, the red supply on the 4 hour, you would draw it like this. Okay, let's call it supply. But there is a difference because in this example, the imbalance lies here below. We are creating this imbalance. Let's make it blue. But we see on the 4 hour, we did already break structure here. Okay, we break structure here and we see here we do have the true imbalance sitting right below the break of structure. So why is this so important? Let me add true inefficiency like this. So why is this important? It doesn't matter how long it will take, but at some point, let's say the market dumps and we see eventually we get a relief rally like this. Most traders will trade the fair value gap, but this is not important. It is not profitable to enter right here. Why? The market needs and wants to fill the true imbalance like this. So what you will see is the price pushing up, and if you go on the 1 minute, there will be some distribution model like this, and then we will go down again. Well, unless we accept higher prices, of course. If we see this, the true imbalance is filled. Buyers are really stepping in and holding the line again, and we might push through supply. This also happens, but most of the cases, if we want to continue, we need to fill the true imbalance. And this is the proper setup. Okay, this is the proper setup and this is not valid. So why is it also important if you are in a shorting position? Let's say you went short here with the break of structure like this. And initially you had your stop loss above the 4 hour high. Okay, what you can do if you can find the true imbalance, you know, okay, we should be protected and you can trail your stop loss above this distribution model because you know there is nothing here what needs to be tested because this was the last level of imbalance. And of course, in demand, it works the same way, but the other way around. So I just want you to know how you can identify proper supply and demand. And this is the way to do it by finding the true imbalances. So another thing to use this method is if we go back to the range and you need to identify the supply zones, you see here, here, and here, you need to know where the actual supply is. Because if you just go on the, let's say this is a daily range, and we see like, okay, we have a daily supply like we saw here. We know, okay, most traders will fuck up. Why? Because they didn't zoom in and they didn't search for the imbalances. So what do I mean by this? In this case, this supply is not valid. Okay, because the real supply lies a little bit higher. And we know it because we can now, let's remove this and remove this. We can now put our supply above the new true inefficiency. Okay, this is the actual supply where the magic will happen. And this here will not be valid as a supply. Okay, so we talked about high quality POIs, but now we are talking about a low quality POI. We still have the same example like this. We still have the same supply, we still have the same imbalance, but now if we zoom in on the 4 hour, we see something different. In this case, we can't find any proper market structure, even on the way up or the way down. There's no market structure. So this is not great at all. Also, we see a lot of liquidity still open. The highs never triggered each other like this. So we created a nice liquidity curve into the supply, and also we don't see any imbalances. There are no imbalances anywhere. So what does this mean? If the price might return at some point, the liquidity inside the supply will trigger and your stop loss might get hit because this is a low quality supply and the price tends to break through really hard. There is no need for the price to search for any imbalances and continue. There is nothing. Actually, this is only fuel in the supply for a proper breakthrough. So this makes it a low quality supply. Do we put it in the chart? Yes, of course. But as I said in the start, we will give it mentally low value. That is really important to understand here. Okay, let's dive a little bit deeper because I want you to know, if you zoom in, how you can draw the best supply ever, but you need to understand what is happening under the hood. So we are still looking at this daily OBIF for the example. Okay, so the supply on the daily will look like this. You created a supply, you see the imbalance, so you tell yourself, okay, this looks like a valid supply. But now you are going to zoom in and you are seeing this. So what you can do is you can create a market structure internally like this. So what you need to understand is you need to identify the last zone, the last push of the buy side in the supply and the last zone of the sell side if you are looking at demand. But we are looking at supply. And we also see, we see a break of structure right here. As we saw in the previous example, we see a few things. We see the new true inefficiency, the new imbalance like this. So let's call it fair value gap. We can lose this one basically. And now what you can do is you delete the supply and you can draw the new supply from this actual low, from this move to this high right here. And you call it your supply. Instead of having this on the left side, it now will look something more like this. This is your actual supply and this is your true imbalance right here. Okay, so there is a difference because this will be cut off and this will also be cut off. So you know, okay, if we talk about entries or if we talk about stop losses, we don't need a stop loss right here, for example, or we don't need to find a entry right here in the old imbalance. Okay, we need to look at this zone right here and what happens here. We need to see if the buyers can find new acceptance or if they fail this level once again. Okay, so now you have, and now you know the true imbalances and how you find them, and now you know how you can draw the best supply and demand just simply by zooming in, understanding market structure and understanding the less willingness to buy. Let's put it like that. It's the less willingness to buy from the sellers, from the buyers before the sellers came in. So this is the actual supply and not this. Thank you for watching. If you have questions, let me know and I will see you in the next video. Bye bye.